Fire! look like. I want to start with two companies I just talked to on Squawk on the Street this morning, NVIDIA and Marvell Tech. Today, NVIDIA decided to give Marvell $2 billion. Here you go, $2 billion, as the two agreed to work together on an AI infrastructure plan. Remember, there's much more to NVIDIA than just chips. There's a whole software ecosystem, and companies that use Marvell for a portion of their networking can use NVIDIA too. It's a smart move for NVIDIA to get companies that don't use NVIDIA to migrate to their platform. Of course, Marvell benefits too. NVIDIA rallied 5.6%. Marvell shot up 13%. Talk about multiple compression. At the bottom today, I think NVIDIA stock was trading at 14 times earnings. That's the PE of a boring old bank stock with bad credits. How can NVIDIA be confused with a boring old bank stock with bad credit? It makes no sense at all. Of course, these weren't the only two winners. Meta Platforms has been pancaked here to the point where it sells for 19 times earnings. I understand that the company has to spend a lot of money buying chips from NVIDIA. That's put a lid on the stock. But Meta really got crushed by a 1-2 punch in a New Mexico and Los Angeles courtroom over the way the company failed to protect the younger users, among many other charges. They lost both cases, and the stock shed billions and billions and billions of dollars over a 2-day period. Cooler heads are now looking at these cases and recognizing that there's plenty of appeals ahead before Meta has to pay anything at all. And if they win an appeal, they're not going to pay a dime. I think that the awards will be trimmed. I also think that the First Amendment is going to be a very good protector of what Meta has to do. What else? We saw the stocks of the banks themselves, which have been horrendous, start to rally. There are always worries about bad loans. They were shrugged off today. Very impressive. I like the action, let's call it the pin action, in the private... in the private equity firm Blackstone. Remember, this is one where the employees actually bought the private credit exposure from the frightened, scared investors who wanted out no matter what. The private equity cohort will also benefit from the possibility of more deals that maybe they'll use it. Please, private equity people, will you sell some stuff? Take a loss. Just get it out of our faces. All right, finally, that's a little extreme. Finally, perhaps some confidence can return. Many people have pulled out of the market fearful of private credit, worried about the Fed, scared about inflation. I spent most of my lifetime trying to explain why it's worth sticking around. I'm doing it again. Here's the bottom line. Maybe this dialogue with Iran is really nothing more than an exchange of messages. Maybe it's meaningless. So consider today a dry run of what will ultimately occur when the war winds down, and they do. And when the doubters and towel throwers come in tomorrow, please notice what the bold were buying. I just hope they come down again so you can get your chance at preferable prices. It'll be worth it. I want to go to Phil in Kansas. Phil.
Booyah, Jim.
Booyah, Phil. What's up?
Hey, I'm a club member. I read your book, and I love your show.
Oh, thank you, partner.
I've got a question. With the AI data center build-out in full swing, what's your current thought on Vertiv?
Oh, I like Vertiv very much. And I know people are going to say, Jim, it's too high, it's too high, it's too high. It's been too high ever since it got too high. There's some genuine homespun wisdom, huh? All right, look, today was a preview of what will happen when the war in Iran winds down. Look at the closing prices, really. Pay attention to what went on. Now, we've got an action-packed lineup. I love saying that. On Mad Money tonight, we got Palo Alto Networks, the CEO of the cybersecurity. He just bought $10 million worth of shares last week. Maybe we ought to listen. Or maybe he's making it up. No. I'm sitting down with the CEO. Find out. Then Salesforce rolled out a bunch of new AI-powered features for Slack today. I was on Slack today. And I'm checking in with CEO Mark Benioff to get the latest. And BKV, I know you never heard of it, but it's a major natural gas producer. And I'm going to explain later on when we see them why you need to pay attention. I think they are set to go higher. I want you to stay in the market, and I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC.
The 8th of this year. That is definitely one of those things, Janet, that I know you remember. Oh, yeah.
Yep.
When you see volatility go from 12 to 30 or 36, that's a big deal. To your listeners, it might not seem like as big a deal, but it's tripling of how much they think the market will move. And right now the market is moving a lot, and we're lucky today that it's to the upside.
All right, so, let's talk about what the market is doing today to the upside. There have been some comments from the administration that they want to find a resolution to the Iran war, and I think a lot of people are happy about that. The market applauding it today. But, it ain't over till it's over, right? And I guess so my question for you is it too early to pile back in? Or, if you know how to trade in options, if you know how to work with derivatives, is there still opportunity right now?
There are. And that's the easiest question you've given me today. There are opportunities. And the reason is that, of course, in many cases, the stocks that Janet covers every day, folks, whether it's SanDisk, that's a $600 stock. If it were Meta, that's a $500 or $600 stock. A lot of the stocks that are in the zeitgeist are not just triple digits like $130 or $170, but in some cases they're in the thousands of dollars. And I can't think of a better way to actually get into the market than to buy an option, which is more or less close to renting the stock rather than buying it. Think of it as leasing instead of buying the automobile, because you don't have to put as much money down. And the trade-off is options expire. They are a wasting asset. So I right now am buying a lot of the defense stocks, not because I think they're going to make a lot of money right now, but they've been some of the hardest hit. As you've said, the energy stocks, Chevron, ExxonMobil, and so forth, Venture Global, these stocks are the biggest winners because, of course, the price of the commodity they pull out of the ground has gone up dramatically because of the Straits of Hormuz and shipping in general coming through that area of the Middle East. So if that's tougher for that to happen, people are definitely bidding up crude oil and natural gas, especially for Europe. And even though most of the oil and gas that we get in this country is coming from domestic sources, thank God, West Texas Intermediate is going to price not at the same price as Brent, which is, of course, the European version, but it is going to track along with that. So when they're both going up, you can see all those energy-related names moving up. And that's just what's happened. So for me, I like looking at Northrop Grumman, NOC, or Lockheed Martin, LMT, or General Dynamics, or Raytheon, RTX, any of those, because they're down 6% since the war began. And I think, obviously, there's going to need to be a rejiggering of our inventory over time. And so I think a 6% discount on those, I like it. Would I chase the energy stocks? No, I wouldn't right here. I would be taking profits there.
Yeah. John, what else are you watching this morning that we haven't had a chance to discuss?
Sure. Let's see. Ciena's moving up nicely today, CIEN, optical networking and so forth. A lot of tech-related stocks that have been hit, of course, like Seagate, which is like a storage or a memory play, SanDisk. Those are all seeing 5% and 6% moves to the upside today. As far as some of the others, Marvell Technology, MRVL, this has been a darling for most of the year. And NVIDIA just announced a $2 billion investment in them, a strategic partnership. And if that sounds like something that just happened a little bit ago, yeah, it did. NVIDIA is putting a lot of money into other AI infrastructure companies like Marvell, like AMD, like Intel, like any of these companies that are involved in AI, whether it's power generation. I know my business partner, Mark Lopresti, talks with Janet about that a lot. All of that is on the table right now. People are really scrambling. And it's kind of surprising to me, Janet, that Constellation Energy was getting hit today. And it seems not because there's not a huge demand for energy. Of course there is. But instead, I think they may have paid up a little too much on one of their recent acquisitions. And until we see a break in interest rates, I think a lot of the people that scrambled in and did deals and financed them, not out of Treasury, but borrowed money, are paying higher and higher rates for that right now, just like anybody with a mortgage is waiting for rates to drop so that they could refinance. A lot of these companies would love to refinance and thought that they would be refinancing at 4% or at 3.75 or whatever, but that just has not come to pass. And the war has obviously had an impact on that as well.
Right. Joe, thank you so much for joining us. It is always a pleasure to have you on the show. Tell us about Market Rebellion and where we can get in touch to learn more.
Sure. Again, we'd love to have any of you come on over and check out, just like the name sounds, folks, marketrebellion.com. And we have a lot of traders. You might wonder what happened to traders when all the computers came in. Well, a lot of the best ones came to work for us as coaches and mentors so that they could help people understand options so that it's not a casino, so that instead it's a better way to trade and they can protect their portfolio better using options. And that's really what we're about, teaching people to get better at understanding risk, managing risk, and, of course, making money.
All right, Joe, that's Joe Najarian from Market Rebellion. And a warm welcome this morning to one of our regulars, Al Root, editor at Barron's. Al, good morning. How are you?
Hi, Janet. How you doing?
Doing well. So I wanted to talk about Tesla. Their stock up. And you wrote a piece entitled, Tesla Stock Rises, Electric Cars Still Matter, Believe It or Not. And I think this war is kind of highlighting that, right? Kind of highlighting why EVs are a palatable option for some and for many other reasons as well. Talk to us about this piece and whether you think the market is waking up again to the value of Tesla.
Yeah, well, it's interesting because Tesla stock has not really gotten any sort of boost from higher gas prices, which back in the olden days of 2022ish, if oil prices rose, that would be good for EV sales. And Tesla stock and stocks of the other EV makers would benefit. Now international benchmark crude is above $100, and gas prices just hit $4, and yet Tesla stock has sort of slid over the past. It's on a 6-week losing streak, hasn't gotten a bump from the Iran conflict at all. Now we do get EV deliveries this week, and so those numbers can move the stock. But I just think it's important for people to remember that while we are certainly focused on AI and Musk's dreams for semiconductors and data centers in space and all of the things he's doing, vehicles still pay the bills. Quite literally, generates all the profit and revenue that's needed to sort of invest in his AI dreams. So I wouldn't completely discount electric vehicles yet. And then, the last part is I just think that the EV headwind this year is still pretty significant with the $7,500 federal tax credit rolling off. So that's something that Tesla and everybody else faces as well.
So, I mean, this is something that is kind of further out along the line, but I heard comments from Kamala Harris a couple months ago saying, basically, to paraphrase, because I don't remember exactly what she said, but to paraphrase, if I'm getting it correctly, I could have it wrong, but she was basically saying, maybe I would have talked to Elon Musk more, or maybe I, would have engaged with Elon Musk more. And I think that when we think about EVs and sort of the context of the changing political winds, I wonder if something like those concessions, those rebates, those tax credits, something like that may come back at some point, right? Like I could see how if there is a change in policy and change in administration at some point, Tesla's fortunes, EV fortunes in general, may shift back again.
Yeah, and you talk about those fortunes. I mean, they haven't sold 2 million cars in a year. They've had declining sales for 2 years, and it'll be a struggle to grow volume this year without the credits. You're absolutely right. I mean, changing administrations means changing policies. This administration hasn't been friendly to electric vehicles, despite Elon's support for the president. It's interesting to hear Kamala say that, or Senator Harris say that, because you go back all the way to Joe Biden might lament the day that he didn't invite Tesla to the EV summit at the White House, instead crediting Mary Barra for creating the EV revolution. Often, it might have sparked a chain of events that nobody could foresee. But,
Right.
there's one more point on that, talking to Elon, just by the sheer size of his wealth and influence and sort of the places, the place he occupies in sort of the minds of tech startups and tech investors, alienating him was probably not the best way forward because, for better or for worse, people listened to him on sort of industrial policy for the country. And so that, it's, hindsight is 20/20, as they say.
It is indeed. And we are speaking with Al Root. He is an editor at Barron's. So talk to us about the SpaceX IPO, right? Because you mentioned a loophole in filing for the IPO that might be used. Talk to us about that loophole and its significance.
Yeah, they're going to do confidential filing by all accounts. And it is a bit of a loophole. Frankly, I'd like to point out I didn't write that headline. It's a loophole that everybody uses. So is it really a loophole? If you go back to the Jobs Act of the Obama era, post 2008 financial crisis, there's no IPOs. So they made this, you could file an IPO confidentially if you're a small company. That made it easier for you. You didn't have to give away your financial data. You didn't have to embarrass yourself, with all these revisions that the SEC requested. And then the process worked so well that they let anybody do it. So now pretty much everybody uses a confidential IPO filing. It sounds mysterious and like they're trying to skirt rules, but this is basically just the way it's done now. What it means for us, me and you, is we don't get to see the S1 until maybe 2-3 weeks before the actual IPO, which is a bit of a bummer because we all are sort of desperate to know how much money they make and what's the revenue and what the margins are and how much the Starlink customers they have and how profitable Starlink is. Like all these questions that we want, how much money they spend on Starship. We want to know the answers to all these questions, and we just have to wait because it'll be a confidential IPO filing. And so, that's just the way things work now. So we just got to keep waiting. But the fact that they filed or are filed means that we are weeks away from that IPO roadshow and the S1 becoming public, which is exciting because they're going to raise an estimated $75 billion. It's going to blow away records. It'll be the capital markets event of the century.
It is going to be the capital markets events of the century. I guess prepare us for it, right? Like, what do you expect to see as a consequence of the IPO? Like, what do you expect to see in the days shortly thereafter?
Yeah, it's a great question, right? So their revenue in 25, again, I can justify this, but it's just they're privately held and we don't have regularly published financials. From 25 they did 10 to 15 billion in sales. They're probably closer to 20 billion in sales this year. What's that from? It's from launch services. They do half the orbital launches around the globe, far more than half outside of China. They have Starlink, more than 10 million subscribers paying for internet. They have defense business, defense communications business. They have 11,000 satellites orbiting above our heads. Margins, profit margins, EBITDA profit margins could be as high as 50%. So this is a company that is actually should, by all accounts, be wildly profitable. So you should be seeing like 40% revenue growth with industry-leading profitability, and they're going to raise money to put data centers in space, right? So outside of the AI arms race, this company would never have gone public. But Elon's AI dreams have sort of fueled this idea that doing the computing in space and being the results will actually be cheaper than it is on Earth. So philosophically, you'll get a lot of that in the S1 too. It's going to be something. It will be a picture of a company that might have the biggest competitive lead over anybody in any industry, right? There is nobody else that can launch rockets. There's just literally no comparison.
It's a huge statement, the biggest competitive advantage by anyone, anywhere, at any time. Al, thank you so much for joining us. Tell us what you're working on next and where we can get in touch with you.
Looking at the war, right? Just to the previous guest, right? We're looking at defense stocks. They have not performed well during the Iran conflict. There's some sense for that, but we're just waiting to see when this fog of war ends. It'll be good for all stocks because VIX is so high and oil is so high. There's a lot of consternation. So how the war or the Iran conflict sort of winds down is top of mind for everybody, and we'll be writing a lot about that. The SpaceX IPO, to your point, and then this is the end of the quarter. tomorrow is April 1st. Oh, my goodness. So now we got earnings. So that's always a big topic.
All right, Al, thanks again for joining us.
Thanks, Dan.
That's Al Root, editor at Barron's. After the break, we'll speak with Michael Hodel, Sector Director of Equity Research Group at Morningstar, about stock picks, sectors he likes, with a focus on communications. And Paul Nolte, Senior Wealth Advisor and Market Strategist at Murphy & Sylvester, will be here to give us the latest on the economy and markets. Stay tuned. That's all coming up next, here on the Business Briefing, Sirius XM, Business Channel 132. Running a small business takes a lot of figuring things out on your own, and that's why over 500,000 small businesses choose Gusto for their partner. With Gusto, you don't have to spend your evenings guessing at tax forms or tracking down onboarding docs. Gusto handles all of that.
tonight with 7 massive games on the schedule. There are playoff implications everywhere you look. Make sure to follow our channel ClipzWorld because we're going live for the 2 biggest matchups of the night. First, it's Knicks versus Rockets at 8 p.m. Eastern. Join our ClipzWorld live stream for real-time stats and expert info as the game unfolds. Then at 10:30 p.m. Eastern, we've got the Cavs and Lakers. We'll have all the stats and information you need right here on